Hello, welcome back to Joseph's Reserves. I'm Joseph, and I save 20% of my income in the form of coins and precious metals. Today I want to talk to you about why I invest in precious metals. It's a question I get all the time. With prices of everything going up, groceries, gas, rent, people are looking for a safe place to put their hard-earned money. The stock market is unpredictable, crypto feels like a roller coaster. Even banks, which we used to trust without question, have had a bit of a problem the last few years. So, what's left? That's precious metals. Gold and silver have been trusted for thousands of years. They've been money, they've been wealth, and they've been a foundation of stability in times of chaos. Today I want to go deeper than just the surface. I want to share with you 5 powerful reasons why stacking gold and silver still makes sense, and why it might be one of the smartest moves you can make for your future. So first is that gold and silver have intrinsic value. And what I mean is that their value is in and of themselves. Let's think about it this way. A $100 bill is just paper with ink on it. The only reason that it has value is because the government says it does. If tomorrow confidence in the dollar disappeared, that paper would be worth nothing. But gold and silver are different. They're scarce. You can't create them out of thin air. Every ounce of gold and silver has to be mined, refined, and brought to the market. That's the real effort and resources, which means there's a natural limit. They're also durable. Gold doesn't rust, tarnish, or decay, and the same gold coin that was minted 2,000 years ago still shines bright today. Silver can tarnish, but it's easily cleaned and has real-world uses in the industry like medicine and technology. They're divisible. You can break them down into silver dimes, quarters, or small bars, and they would still be valuable. Try cutting a $100 bill into 10 pieces and see how many people want those scraps. And most importantly, they're universally recognized. Whether you're in the US, Europe, Asia, or Africa, people know gold and silver. They're accepted and trusted everywhere, which you can't say about most modern currencies. That's why intrinsic value matters. Precious metals aren't based on the promise or trust in a system. They're based on their own scarcity and utility. Next up, inflation. If you've been to the grocery store lately, I don't need to tell you that your dollar isn't stretching as far as it used to. Inflation eats away at your buying power. What cost $100 a few years ago might cost $120 today. Governments and central banks create this problem. Every time they print money, every time they add more dollars into circulation without backing, the value of your dollar that you already hold gets diluted. It's like adding water to soup. The more water you pour in, the weaker it tastes. Gold and silver, on the other hand, don't get diluted. An ounce of gold is an ounce of gold, whether it's 1920, 2020, or 2120. That stability is why metals are called an inflation hedge. Here's a simple example. Back in the early 1900s, a $20 gold coin could buy you a good quality men's suit. Today, 1 ounce of gold is roughly the same as that $20 gold coin, and it still buys you a high quality suit. The dollar has lost about 98% of its purchasing power during that time, but gold has held its ground. And it's not just about inflation. It's about currency risk. Countries all over the world have seen their money collapse. Think about Venezuela, Zimbabwe, Argentina. When their currencies became worthless, people who held gold and silver were able to protect themselves. That's a lesson we should take seriously because no fiat currency lasts forever. Now let's talk about diversification. I am not a financial advisor, but most financial advisors will tell you not to put all your eggs in one basket. That means to spread your investment across different classes of assets so that you don't lose everything if one market tanks. Gold and silver don't move the same way as stocks, bonds, or real estate. In fact, they often go up when other things go down. During times of crisis, whether it's the stock market crash, a recession, or a banking crisis, precious metals tend to shine the brightest. Even if you only hold 5% or 10% of your wealth in precious metals, it can act as an insurance. Think of like your fire insurance for your house. You don't want a fire to burn your house down, but you still pay the premium because it's possible that it will, and if it does, you'll be glad that you did. Precious metals work the same way in your portfolio. For example, in 2008, when the housing market crashed and the stocks dropped by nearly half, gold held strong and actually gained some value. People turned to precious metals as a safe haven, and those who already had gold and silver were protected while others saw their retirement accounts cut in half. One of my favorite reasons to invest in precious metals is that they are tangible. You can hold them in your hand. Try holding your 401k in your hand, or try holding your crypto wallet. If the internet goes down, you can't. But you can stack your ounces. You can see them and you can feel them. That tangibility also gives you privacy. When you own your physical gold and silver, there's no middleman, no bank statements, no online accounts you can hack. You control it completely. And don't underestimate portability. Imagine needing to move across the country or even across the world in a hurry. You could take tens of thousands of dollars worth of gold in a very small bag, something you can't do with stacks of cash or real estate. Precious metals give you something that is rare in today's financial world: independence. You're not at the mercy of a bank, a broker, or a government system. You hold the wealth directly, and that's a powerful feeling. Finally, let's talk about the history. Precious metals have been money for thousands of years, long before the US dollar, long before credit cards or PayPal. People trusted gold and silver as the ultimate form of money. Think about it. Every great civilization, the Egyptians, the Greeks, the Romans, the Chinese, even early Americans, used metals as the foundation for trade. When they issued those coins, they were backed by real gold and silver. Even in the Bible, gold and silver consistently tied to money and wealth. They're referred to as honest weights of measurements. That means that people understood thousands of years ago what we're relearning today. Metals are trustworthy, while paper promises are not. History shows that every paper currency eventually fails. The Roman denarius was slowly debased until it was worthless. The German mark after World War I collapsed into hyperinflation. More recently, we've seen places like Venezuela and Argentina lose control of their money. In every single case, people who held precious metal fared far better than those who trusted their governments to keep their currencies stable. So again, why precious metals? Because they have real intrinsic value, because they protect you from inflation and currency risk, because they balance your portfolio when other assets may fail, because they're tangible, private, and portable, and because they've been trusted for thousands of years through every rise and fall of nations and empires. That's why stackers like us keep building ounce by ounce. It's not about getting rich quick. It's about building lasting wealth, protecting our families, and preparing for the future. If this video taught you something or just simply encouraged you to continue stacking precious metals, please give it a thumbs up. Comment below and let me know what you're stacking today, or maybe some reasons why you stack. And definitely share this video with anyone you know that might be interested in precious metals. Make sure you subscribe for tomorrow's video, But most of all, thank you for watching, and remember, every ounce adds up. Just keep stacking.